Good evening friends, I am Abhijit and I welcome you all on my YouTube channel. Listen, today we are discussing about how Nifty and Banknifty have performed today, that is 11th of April Monday, and how Nifty and Banknifty can perform tomorrow, that is 12th of April. Just letting you guys know that this weekly expiry will be on Wednesday rather than on Thursday, because we are having two trading holidays in this week, Thursday and Friday. So Wednesday would be the expiry day for this week. So let's look at the global indices. If we talk about the US indices are working in red as of now. Dow Jones is down by 0.5%, S&P and Nasdaq are down by more than 1%. If we talk about the European indices, the European indices are also trading in red except CAC, which is more or less flat. DAX is down by 0.67% and FTSE by 0.63%. So as of now, the global markets are not giving good signals. The Asian indices closed in deep red. All the major indices were down by more than 2%. In fact, ZSC component and Hang Seng were down by more than 3%. So we might expect gap down tomorrow. Let's go to the FI DI data. FIs were net sellers, they have sold for 1145 crores. DIs were net buyers, they have bought for 486 crores. However, the DIs are buying less as compared to what FIs are selling, so that's why all these things are pulling market down. So what today, I would say it was a very range bound session. It started somewhere around 17,750 and then closed somewhere around 17,650. So this was the 100 points range for the Nifty. If we talk about the price action for tomorrow, the price action is saying that since we closed on the lower part of the trend, that means that we can have a lower opening tomorrow. As of now, SGX Nifty is more or less flattish, and since it looks like it is 65 points down, it can go further down and we might see a gap down opening. But for gap down opening, 17,600 will definitely act as a first support for the market. Second would be 17,550, third would be 17,500, and the last would be 17,400 to 420. So these are the support levels. If we talk about resistance level, the first resistance for market would be tomorrow would be 17,700, second would be 17,800 to 820, and the third would be 17,920 to 940. These are the supports and resistances. Let's validate it on the option chain. As of now, we can see 17,800 is definitely going to act as a good resistance for the market, followed by 18,000. If we talk about the support, 17,500 is the level where support is getting formed. However, at 17,600, put writers have already started closing their position. That means that this support is not really strong, it might break. So these are the levels. On Bank Nifty side, Bank Nifty was more or less, I would say, stronger than Nifty, because in Bank Nifty the selling came only in the second part of the trading session. In the first part, the Bank Nifty was quite firm. If we talk about Bank Nifty, the first support for Bank Nifty would be 37,380 to 37,400, second would be 37,200 to 250, and the last would be 37,000 to 37,050. On the resistance side, the resistance which was given to you in the previous video, 37,800 to 37,850, that resistance level has been perfectly respected by the market. This is going to be the first resistance. Second would be 38,000 to 38,020, and the third would be 38,130 to 150. Let's go to the option chain of Bank Nifty to validate the levels. Here we can see put writers have closed their positions. Call writers. Talking about the call writers are active at 38,000 strike price, followed by 38,500. If you talk about the put writers are active at 37,500, followed by 37,000. On a broader range, 37,000 to 38,500 is the trading range in this coming week, and this is a shorter week, so keep your positions light. We might see volatility in the indices, so keep your positions light. That's all for this video, friend. If you like the video, please like and subscribe to the channel. If you want live market updates and stock recommendations, do follow my Telegram channel and Instagram channel. Link will be given in the description below. Thank you.